So let's just discuss exactly what happened and get everyone up to speed. I know a lot of you were in the market yesterday evening, but for those who weren't, this is what the headlines are. Those earning basically $1 million or more, the new top rate coupled with the existing surtax on investment income means that federal tax rates for rich investors could be as high as 43.4%, according to the latest Biden proposal. Actually, total tax rates for New Yorkers and Californians could top 50%. I believe the latter actually getting towards 60%. And so speculation arising then very quickly that traders may sell shares before any change is made to capture that lower rate. And so just having a look at the S&P and how that behaved when that headline came out, you can see this kind of area here of aggressive selling pressure at the moment of which that news broke, and we came back down to test technically an area that's been in play for a bit of time here, which has been that low on the 14th. And then the low of the week, really. We have bounced and we've stabilized. We've reversed perhaps like a third proportion of that move on the sell-off from yesterday. For me, there's a couple of things here. From a news perspective, the plan is still yet to be finalized. Biden is expected to release the proposal next week as part of the tax increases to fund the social spending in the forthcoming what's called the American Families Plan. So for me, I feel a little bit indecisive at this point about how I feel technically about the success or not of this proposal in its current form. I haven't really read too much in the way of real detailed research, but my overall feelings here is I'm a little bit reluctant to pass judgment yet that this is an overtly negative scenario or one that should just be purely ignored until I kind of get a bit more facts in to make a more informed decision. The one thing is, if you look at the S&P on a daily chart here, this bar here is that kind of one we've been watching throughout the entire week, really, which is encapsulating some of the initial downside volatility that was seen. Remember, the first 2 days of trading of this week was quite negative, and then we had the recovery pretty solid on Wednesday, and we sold off yesterday on the Biden news. But if you actually look at where we are at the moment, I mean, for me, this is consolidation. I don't necessarily think that this is negative. And actually stepping out of the crosshairs of the intraday noise, I think that equity markets have been, this big upward surge we've had with the breakout from the March highs that's really been initiated through the month of April. I think we were pricing in perfection to a certain degree, and you get the kind of confirmation, the earnings come out, okay, fine, they're great in terms of some of the numbers. Then you layer in the fact that global COVID is causing a little bit of lingering concerns, particularly the impact that the emerging markets spread, like what we've seen in India, could mean for the global economy and overall demand, and the risk of spillover into then new COVID cases emerging elsewhere in other areas, more kind of significant as far as markets are concerned on a global level, like in the US. And then you've got this latest tax plan. When you actually look at it here, I don't know. I mean, the other side of me feels like perhaps this is a healthy situation to have the market kind of consolidate, to rein in some of that kind of runaway train of optimism for that priced in perfection that I was referring to. And perhaps that's what's needed then for us to kick on and start pushing higher again. Again, even if we do break down in price, I don't think I'd even begin to start to feel bearish unless we got below 4,000, which is this kind of lower down key level, which was the previous rejection of the all-time high. It's the psychological level. Horizontally now a good level as well, around the similar price point of 4,000, 39.91.5 in the S&P futures. So at the moment, I think we're in a bit of consolidation, and I don't necessarily feel overtly spooked by the tax news. Again, I want to see a little bit more about the validity of actually this being pushed through in its current form, because a proposal is one thing, implementation and passage through Congress is another. And another thing to be aware of is we did have the GOP come out yesterday, and they've made a counter offer basically to the in excess of $2 trillion infrastructure package that Biden had tabled as the next form of stimulus. And the GOP counter proposal comes in at $568 billion, which is obviously woefully short of the $2.25 trillion that Trump had priced, or Trump, that Biden had tabled. So this is another thing I think requires a little bit of just monitoring. And they've made a counter offer basically to the in excess of $2 trillion infrastructure package that Biden had tabled as the next form of stimulus. And the GOP counter proposal comes in at $568 billion, which is obviously woefully short of the $2.25 trillion that Trump had priced, or Trump, that Biden had tabled. So this is another thing I think requires a little bit of just monitoring. And again, this could be another bit of ammunition for the bears who are calling the top, because if the market has been prepped up for another big sizable stimulus package, and if you think about the negotiating posts, the point being is that this GOP counter offer is obviously going to be way off the mark to get any type of negotiation to the point of a compromise. But you can kind of see how far apart that they are, and the further apart that they are, generally the longer that it takes. And I would say the more lower the kind of median sweet spot is where they meet each other, and that's going to be further away from the sizable number of which the markets were pricing in before about this kind of another enormous stimulus package coming from the US. So that could be another negative factor if you wanted to look at it that way. So there's a couple of things there that I think you really need to chew over. As I say, I don't really have a view short term about this tax thing until I think over the weekend you'll get more talking heads. Bank research will come out. I think you can make a bit more of a definitive call about the actual impact that could have in terms of quantifying this speculation about people basically selling shares before being able to capture the current existing capital gains tax rate before then the new one comes in. So I'm kind of a little bit reluctant to really commit to a view on that. But as I said, on that S&P higher time frame, I still think that if we come lower, we've got to come quite a bit lower, sub 4,000, and we're currently trading 130 points above that in the S&P. Before I think, for now, I'll become a little bit more bearish. Schlumberger, Honeywell, Kimberly-Clark, probably the bigger names. And I've shared this graphic in the community if you want to have a closer look at the technicals for each one of those stocks. All right, that is it. So remember to check out the podcast. It'll be coming out later on today. You just search for Amplify Live Market Watch and you'll find it. Otherwise, have a great session. Enjoy your weekend. Stay safe.